Start going live for Christ. Hello, hello. Hello, hello. I hope the volume is okay. Hello, hello. Share the screen. Share screen. Window. Share. Okay, so we're looking at gold. We're looking at gold. Let's look at the daily time frame. So in nuclear analysis, we can see that I've already marked out the gold, but I will explain the market to you. When you're looking at the market, what you want to find out, you want to look at the market bias. What is the trend, the general bias in the market? So from there, you can determine your own bias. So you look at the higher time frame, do multi-frame analysis to identify the trend bias, and then that will help us to know where smart money is showing interest in a place where we can place our trade in order to make profitable trade. So I'm looking at gold at the moment, and I'm using the daily time frame, and of course we are employing the smart money concept. I will explain further. Now, the smart money concept is simply based on the basics of Forex trading. You know that in Forex trade, there are two main types of trend. The market is either trending or going sideways. So with the smart money concept, we want a trending market that is either is in an uptrend or is in a downtrend. In an uptrend, we discover that the market should be making higher highs. From here, it makes a high, a higher low. It doesn't go back to the previous low. It makes a higher low. It breaks the structure and creates a new high, making it a higher high. And then it pulls back, makes a higher low. It doesn't go back to the previous level. It makes a higher low. Then again, it breaks a structure again and creates a new high. So when we see the market moving in this pattern, we say it is in an uptrend. Then the other way, if the market moves low, creates a low, and then makes a lower high, goes up, but it retraces, but it doesn't go back to the previous level. It doesn't go back to the previous level. It stops at a certain point, and then it moves down to create a lower high. And then it pulls up again, creates a lower low, then it pulls up again, creates a lower high, and then breaks through the structure that of the previous low and creates a new low. So if we have a market that is doing like that, well, we say it's a downtrending market. But if the market is just doing something like this, it doesn't break the previous high, it doesn't break the previous low, we say it is a ranging market. So in smart money concept, we don't trade the ranging market. See, there is no new high, there is no new low. The market is just moving sideways. So we don't trade such in smart money concepts. Okay, so let's make progress. So as I said, we are trading the smart money concept. Let's clear up the chart a bit so that we can make, have clean charts. Okay, I think that should be it. Now look at the gold chart. I've already marked out this just for us to save time. Now if we look at the daily time frame of gold, we can see that it's, if you're wondering, is it in an uptrend or in a downtrend? If we use the basic principles of trending. Now here we see from this low, it breaks through this structure. There's a break of structure here. And then the market creates a new high. It comes, when you see there's a break of structure, The next thing is you need to know the level that created that break of structure. The simple way to do it, this thing is dancing. Okay, the simple way to do it is to get to the, when you cross the bar. Now look at the lowest point on the chart from where that break of structure happened. So it is here. So this is our low. Now there's a break of structure here, and then the market creates a new high. There's a break of structure here, and then creates a new high. It pulls back. It creates another high. This is a break of structure. And then it now goes high up. Now, but what we now notice is that, okay, from here, this is the level that the buyers will want to defend. This level. This is the highest place it went to, for those that, for the bulls, this is the highest level they went. So the markets will have to, beat that level for it to continue going higher. But for now, the market got to this level at 5,608. And since then, we can see that it's pulled back and it's been on a downtrend since. How do we know that it's on a downtrend? Now look at it. This is a higher, let me label this so that for clarity purpose. Here is a higher low. Here is a higher low, HL. Then it pulled up, came back. The market didn't really break the structure here. Then it went back again. And then what we noticed is the market came and just created a change of character here. What is a change of character? When the market now breaks through the previous support. This is this higher low. Like I said, the market now came down and broke through it. So creating a new low. So you can see it's created a lower low here. Then it went up again and broke through, created a break of structure here. Let me make it bigger so we see. So you can see there's a break of structure here. So based on this daily time frame, we can conclude that the market is on a downtrend. Now, when we look at, based on the daily time frame, we need to know, for us to know where to enter the market. So based on the fact that it is on a downtrend, so it means that we should be looking for selling opportunities. Now, for us to do that, based on the daily time frame, we have to know the latest levels, key levels, so we can begin to map out where the latest key levels. So in terms of latest key levels, this is one. This is a key level. Let's call it the lower high. And then from where it broke through and created this new lower low. So between here and here this is where we have our trading zone. So this is where we have our trading zone, here and here, based on the daily time frame, which means we have to be able to identify the position where we can enter for a sell. And how do we know that? We'll be able to demarcate the key levels, the recent resistance on the higher time frame, and the recent support. So these are the two levels. And when we mark it out, here becomes our trading zone. Here now becomes our trading zone. From here to here, now becomes our trading zone. And then the next thing we do in the smart money concept is to identify the premium and discount zones. So the discount zone, is the place where the market is selling cheaper, while the premium zone is where the market is selling higher. Now, if you are on a downtrend, you'll be hoping to to place trade in the premium zone, which is above where the prices are higher. In the middle, we have the equilibrium. And so in this market, we'll be we can see that based on the daily time frame, that the market is currently in the discount zone. So, and we'll be expecting it to get into the premium zone so that we can now look for key levels or positions of interest where smart money will be hoping to place their trades. That's where we want to place our trades so that we can trade along with the big boys. So currently the market is here, so we're not making any entry around here since we're looking at the downtrend. And like I said, the market is currently retracing and we're waiting for it to enter this zone. You can see that here we have, in the middle here, we have the equilibrium. So this is the middle line. So once the market crosses into the premium zone, we'll be able to look for selling opportunities. And that is number two. So the next important thing is when the market gets into the area, the premium zone for us, we'll now look for areas of imbalance. Let me clear this because we have identified here as the premium zone. So let me clear this so we'll be able to understand what we're looking for. If the market gets here in the premium zone, we'll be looking for areas of imbalance. Because usually the market will want to clear any imbalance before it can make any movement further. That is one thing that happens in the market, in trending markets. As the market is moving, it's creating areas of imbalance. So for instance, you can see that this market has, as it was pushing down to create this new lower low, we can see fair value gaps here. You can see fair value gaps here. You can see other blocks. This is the other block actually that produced this movement downwards. Let me color this so that we'll be able to understand. And make it pink. Okay. Now, if you look very well, you can see also these are the areas of imbalance. Now, in the premium zone. Now, in that premium zone, we have to use the Fibonacci tool to be able to mark out the 62% and 79% areas. These are areas we call the optimum trade entry zones, which means we're expecting to, based on the daily time frame, we're expecting the market to come to this zone where we can begin to take our trades. But since we don't trade with the daily time frame, the daily time frame is actually to give us an idea of where we are going. So we now begin to look in the lower time frames to identify areas of entry. So from the higher time frame, we know that the market is, our bias is bearish. So, and we've been able to identify the areas of interest, the POIs, which is this zone. So we're now going to move down to the lower time frame to see where exactly we can pick our trade. We're looking at the 4-hour time, 4-hour time frame. Okay, let's see what has happened. Okay, let's see. I want to see what I have done. Okay, so what do I do now? Let's do